Hi, this is Randy Finney with the right side of the chart, and this is an early session update for Tuesday, April 8th, 2025. Figured I'd get a quick video out. Made a point to get a post out to you with the chart. Potential reversal point, we'll talk about that. Honestly, not much to add. Covered these, I did extensive videos yesterday, got a lot of posts out to you. Just to summarize, and in case you're just catching up. We hit T3 yesterday. T3 are my long-term targets, with the deepest being T8, T7. I'm sorry, down here, calling for about a 50-something odd percent drop. I think it's 50, close to 55. I keep talking about. No, it's a little over 50. Whatever. And nothing goes straight down forever. You will not go straight there. We may not even get there. Who knows? But so far, like I've said, a lot of check marks. So let's talk near term to try to thread the needle here. That's what I like to do as an active trader. So T3 was hit with a momentum fueled overshoot. Nice reversal today. Let's still drill down to those short-term charts I gave you this morning. Gave it to you on the 15-minute time frame. The line I had was right here to show just the gap, but this is the level. Somebody asked in a comment I replied today. It's that reaction high. That's the fake news reaction high yesterday. For those of you not familiar, I mentioned it yesterday. Somebody tweeted out Trump was considering a 60-day pause on the tariffs, and that proved to be fake news. One site posted it, a little 2-bit trading site, and another 2-bit, some Twitter guy, whatever, some just guy that has a few followers, put it out there, and CNBC picked it up and literally put it on their crawler down on the bottom. And then Bloomberg followed up, I believe, after that, because quoting CNBC as saying it. So that's what caused that spike. Either way, whatever, we stuck with it. As I mentioned, coming in the day long, took a little pain in the morning, but that's to be expected. With this volatile market, you have to use wide stops. And then, so that's a significant high. So this is a big gap. So bottom line is, guys, here's the bottom line. We've gone 10% off the lows. Remember, we're still over 20% off the highs, in QQQ. But a 10% in 2 days, that's good enough for me as an active trader to harvest some nice profits that I came into the week with and added to yesterday. And it's that high right there. Let me put the line if you want the number, but you can see the reaction high. Traders are always going to look at these reaction highs you can put the crosshairs on it, and tells me it's exactly 433.14. And so far, as I'm doing this video live, we just hit 433.07. Close enough for government work. I always tell you that I like to sell whether it's close a long position and or enter a short, which I did both of, hard reversal, a little shy of the actual resistance level. In fact, I started shorting right there because I didn't want at the bottom of the gap. So then I added here, that's kind of a reversal zone. Now, look, they fill it, we go up, but here's the thing: we're up 4%. You might say, well, yeah, Randy, but we've been dropping 6. 4 is a hard up on the Nasdaq, and again, it's 10% in 2 days from the lows. So whatever, good enough for me. Harvest some near-term profits. I give you some pullback targets. They're not all marked up here. Traders are going to look. Here's one right here. I would say, yeah, you have that low of the candle there, but there's a couple candle reactions high. So let's say minimum about 437.31. Again, I'm talking active trading. If you're a long-term trader, this stuff doesn't matter to you. That's a 1.4% pullback. With a handful of NQs, you're going to make a pretty penny. I don't have to tell you that if you trade futures. Next target there, which is likely, that probably my max target right now. I'm very fluid, flexible trader. I'll take it as it comes if we even get the pullback. And then you have that gap. There's the gap right there today, all the way down. A full back gap fill would take you down there. So this is kind of, I think, a sweet spot right here. Minimum, likely, and max target, we'll call it. Likely is current preferred target. That'd be a pullback of about 2.84%. Now, let's talk about if, that's plan A. Plan A doesn't work. Plan B, they're going to pop this level. They might try to get into there, and then I suspect that'll just clear out, suck in some more longs, clear out some more weak-handed shorts. And what I also replied, let me give you the upside targets there. You can see them there. Max target there, and that's what I think on Friday or Monday I told you to look for about a 15% bounce. Would be my max target. Now would take you up there about 466 on QQQ. But the thing is, they're just there's a barbecue. I can smell it all the way from Wall Street down here in Southwest Florida. of shorts getting cooked, what I call the JCL. That's what I meant in that comment reply I made today. JCL is shorthand for Johnny Come Lately shorts. And those are the folks, the guys and gals that they didn't want to short here when we started shorting, or here, or when the 200s were taken out on QQQ, or 200s were back tested on QQQ. They wanted to start shorting the other day because they believed, like Henny Penny said, the sky was falling, and SQQ right up to resistance there. So they're getting cooked right now. If they bought that leverage ETF, they're down 25% in 2 days. The last poor guy or gal that bought right here is literally in just less than 24 hours lost 25%. Again, that's leverage, and hopefully. But I know, I just used to do been in the financial world as a stockbroker before, and I just know, reading posts online from different threads out there, that a lot of people use leverage in a reckless manner, especially newbies. And so you're leverage up 300 times. They should have at most adjusted that leverage, and they don't. So either way, you'll start to see the same thing happen in reverse. There was a lot of margin force selling there, and the same folks, if they load it up in their Webull account or whatever on this, they're going to be squeezed out. I don't know if that's done yet. All I can tell you is big buy programs and folks like me, I think they'll start taking some profits there for the institutions and professional, and even some of the more adept retail traders that started going long Friday or yesterday. All right, so that's where we're at. All I can tell you is levels where we're likely to get a reaction, and then if we don't, we could certainly go up more. But let's talk about that. So let's talk about QQQ. All right, up 10% since from yesterday's lows. If it enters the gap to make a full gap backfill, it's got to go up another 1.3. Can it do it? Yeah. But we'll be up 11.5%. So what that means is, we're oversold on the long-term indicators, but now on the short-term indicators, we're in a bear trend. You want to call it a bear market or not? Semantics. Definitely. Technically, the NASDAQ 100 did exceed the 20% drop off the high, so that makes that a bear market. But, we're in a bearish trend, and in the 5-minute chart, we just hit overbought right there. We're not at extreme overbought. That usually only happens in bull markets before the highs. Once you get in a bear trend, you want any level back to the 70 level on the RSI is usually about where the rallies will stop. You can see I'm just pulling the line up, showing you what happened, and then we had a drop there. That was probably 1+%. We hit overbought on the 5-minute there. We had that drop, and we're overbought there. Hard stop. I don't need to sell you any more than that. You guys do what you do. I'm just showing you the levels, showing you what I do. And there's the gap right there on QQQ 60-minute chart. Again, I gave them to you on the 15. The 15 is what I'm trading here. And so there's your targets. How to trade it, it's up to you. Stops are going to be commensurate with your pullback target. And you might say, well, Randy, what are you talking about? This is all active trader stuff. Again, I always speak to the long-term trend and swing trader. Nothing has changed. These are the long-term targets. If you shorted any or all of these earlier very objective levels that we had, you're still very profitable, and at the very least set stops so to assure a minimum of break even at minimum, wherever your average entry price is, and you can also set stops to guarantee a profit if you want. Ride out the bumps. If you're going to swing for the prize, anyone that's going to trade a 50% bear market is going to have to ride out extremely powerful, high well into the double-digit bear market rallies. Not one, but at least two minimum. Usually in a bear market, and that's usually your EW Elliott waivers will count the 5-wave primary cycle. It's wave 2 and 4, your counter trend rallies, and in a 50% bear market plus. Remember, most don't want to hear. I talked about it back before we topped. I may very well extend some longer term over time. I think we will go. This is just my initial bear market target for the first bear market, and we hopefully get a nice bear market rally off that. And if something else happens, then hopefully, for my sake and the analysis I provide you guys, I will adjust accordingly and see if something else has changed in the technicals and or fundamentals. But what's going to happen? Dip buyers do what they do. Bell has rung. Pavlov's dogs are salivating. And how could you not? I mean, like I said, if you liked Apple, up here, you gotta love it right here, 30% cheaper. I'm just on the weekly chart now, and at support. If you liked Microsoft up here, Back 26% of stock's been cut in a quarter. How do you not love it here? And that's support. So again, I'm beating a dead horse. If I go over the levels we hit yesterday, a lot of support levels, oversold. Like I said, that's usually in a bull market. It's a raging gift. That's like the gift from the gods to get a 70 tag on the. I'm sorry, a 30 tag on a bull market. So if you are one of those believers, this market's going to new highs. I can't tell you what to do, but if it were me and I thought the market was going to be new highs, I'd be buying with both fists and throwing away the key on a tag of the 30 level on the RSI. You can go back as long as you want in bull bear markets and see when that happens on QQQ. I'll just circle it for you. What I'll do here, I'll turn off all the lines. I'll just use my arrow tool, go up from the bottom. It's simple stuff. Give me my arrow tool, 30 level tag right here. 30 level tag. We had a double kiss right here. There was a little more downside, but not too much. And we had positive divergence after that. And that was also a bear market, so that doesn't count, right? Bear market. I said in a bull market. So if that's your belief, bull market right there, 30 level tag, 30 level tag. And we have to scroll back farther. There we go. And that was the end of a bear market. See, that's the difference, guys. In bear markets, you're going to get oversold, and then oversold tends to become more oversold and or stay oversold for an extended period of time. Here you had a couple tags. The market kept going down until you put in the positive divergence. So I want to differentiate, as I started to say earlier. In a bull market, yeah, that's a gift from the gods. But in a bear market, it's the opposite for those that think the market always goes up and we're always going to be in a bull market. It's a big, giant suck-in trap, because they start to buy it and it start to bear first little kickback, bear market rally starts, animal spirits return, and then the next leg down comes right when it starts to look and smell and feel good. So, all right, that's long-term stuff, short-term stuff. And again, in the whole disclaimer that I may be wrong, and the best I can do is learn to recognize as soon as that's happened. As of now, there's been nothing but solid, one after another check marks for my longer-term bearish case. Therefore, my longer-term bias says we're going a lot lower, and I'm going to trade this as what I believe it to be, a bear market rally. And as such, I'll be looking for swing positions to get back in short. I told you I still expect more upside. Told you started moving rare. Don't move money off and like the 401k indicator. Moving some in for, again, what I still think is going to be a lot of more bounce, more than the 10% that we've just had, or 11% or whatever it is, or 10. And that's QQQ. SPY, let's talk about ES real quick. Let's not forget the S&P 500. These are the futures. I didn't include this chart. I just wanted to fire that one off to you. There's yesterday's spike high. There's the resistance level right there, 52.87. We're at 52.88. Close enough for government work. And again, you can see a potential uptrend line. Pullback targets, if you are an ES trader, right there, 51.86. That's probably where they'll buy it up and contain it. If it gets a little uglier, maybe somewhere around this level here where that gap was. But this is just like, that's all I'm looking for right now, guys. Just a little, what is that? 2.2% pullback in S&P, comparable on NQ. And like I said, there's a big old fat gap here. Let's look at SPY. Because some traders look at QQQ and trade it, and some look at SPY. Therefore, I look at both. That's a 15-minute chart. Let me mark it up. There's the, again, it's yesterday's spike highs, plus the gap lines up with the gap. And that's where we're at. So it's pretty good resistance. And again, not overbought on any of the, anything but the shortest term indicators, the 5 and 1 minute charts. And that's it. All right, I'm going to wrap it up here, because if I just keep going over and over and over, tell you at resistance, I think we're going to get a pullback. And active trader, you can game it, and books profits on longs, short, make a few more bucks, turn around, go long, and that's it. And hey, I would need to say this. It wouldn't surprise me at all. I keep talking about the potential for 16% counter trend bounce. Wouldn't surprise me at all if this is the end of it. So that is possible. Not, of course, it's possible. We all know that. It's in the realm of probabilities. It's not my preferred scenario, and it would zigzag down, but it's certainly I'm certainly open to it. So again, I'll do these updates as anything changes. If I see anything I missed, but otherwise, let me get this out to you and continue to hunt for some new trading ops. All right, this has been Randy Finney with Right Side of the Chart. Have a good day.